Elon Musk, CEO of Tesla and SpaceX, has reportedly made multiple personal appeals to President Donald Trump, urging him to reconsider a series of global tariffs that have disrupted international markets. Despite Musk's efforts, Trump has maintained his tariff policies, escalating trade tensions, particularly with China. This development highlights a growing rift between Musk and Trump, who have previously shared aligned economic views. Musk's advocacy for free trade has led him to publicly criticize the administration's aggressive tariff approach. He has questioned the economic rationale behind the tariffs and emphasized the negative impact on global supply chains and industries like automotive manufacturing. In a notable move, Musk shared a video of economist Milton Friedman's pencil speech illustrating the complexities of global trade and the importance of free markets. This act underscores Musk's belief in the interconnectedness of the global economy and his concerns over protectionist policies. Tesla has also expressed concerns about the potential harm these tariffs could inflict on U.S. electric vehicle manufacturers. In a letter to the U.S. Trade Representative, Tesla highlighted the risk of retaliatory tariffs affecting exports and the broader implications for the automotive industry. The internal dynamics within the Trump administration are complex, with advisors like Peter Navarro advocating for protectionist measures, while others, including Treasury Secretary Scott Bessent, suggest a more negotiable approach to tariffs. This division has led to public disagreements, with Musk criticizing Navarro's stance in promoting free trade principles. As trade tensions continue to rise, the conflict between Musk and Trump over tariff policies underscores the challenges of balancing national economic interests with global market dynamics. The outcome of this dispute could have significant implications for international trade relations and the future of industries reliant on global supply chains. Which Trump-supporting billionaires have lost the most in tariff markets turmoil? Number 1, Elon Musk. The world's richest man and the chief executive of Tesla, who has already seen his wealth drop precipitously after becoming a high-profile and controversial figure in Trump's administration, has taken the biggest hit by some margin. Tesla was already facing a potential buyer backlash over its CEO's controversial behavior, and as its shares plunged, $31 billion was wiped off Musk's net worth between the opening bell on Thursday and the market closing on Friday. The recent fall in Tesla's stock has meant his private rockets and satellites business, SpaceX, became his most valuable asset. So far this year, Musk's estimated wealth has fallen by $130 billion, although he still comfortably remains the world's richest person, with a net worth of $302 billion. Tesla's shares fell nearly 5% on Wall Street on Monday afternoon, adding to these losses. Number 2, Mark Zuckerberg. The Facebook founder and owner of Instagram and WhatsApp had the next biggest loss at more than $27 billion. The world's third richest person, with an estimated net worth of $179 billion, was hit by a plunge in the value of Meta. Its stock dropped almost 14% over 2 days, as the tariff war hit tech companies particularly hard. Its stock edged slightly higher on Monday, up almost 1%. Many of the world's biggest companies rely on markets in Asia, which had the heaviest tariffs imposed on them by Trump for manufacturing, computer chips, and IT services. Zuckerberg, who performed a remarkable Trump pivot of Meta weeks before Trump took office, has seen more than $28 billion wiped off his personal fortune so far this year. Number 3, Jeff Bezos. The Amazon founder and Washington Post owner had the next biggest two-day loss at $23.5 billion. The market value of Amazon, a leading seller of imported goods from around the world, has fallen by hundreds of billions of dollars this year. China-based sellers have more than a 50% market share of Amazon's third-party marketplace, while its cloud services business also relies on tech produced primarily by manufacturers in Asian countries such as Taiwan. Bezos, the world's second richest person, with a net worth estimated at $193 billion, has seen $45 billion wiped off his fortune so far this year. Amazon's shares were marginally higher, up 0.4% on Monday. In February, Bezos's $10 billion Climate and Biodiversity Fund halted funding to one of the world's most important climate certification organizations in a move viewed by some as a bowing down to Trump and his opposition to climate action. Number 4, Bernard R., the owner of the LVMH luxury goods empire, lost $6 billion on Thursday and more than $5 billion on Friday as Trump's tariffs hit the Asian factory hubs that underpin the global garment industry. Shares fell even further on Monday, by more than 4%. The net worth of Europe's richest person and the fourth wealthiest individual in the world, according to Bloomberg, has dropped to $158 billion, down $18.6 billion so far this year. Arnault has been friends with Trump since the early 1980s when they met at a charity dinner, and the US is his business empire's largest market, equal in size to all European sales. Number 5, Warren Buffett. Not all billionaires have seen their net worth decrease despite the two-day rout. The canny chair and largest shareholder in the investment company Berkshire Hathaway, known as the Sage of Omaha, has seen his wealth increase to $155 billion this year. The world's sixth richest person, whose annual shareholder meetings have been called Woodstock for capitalists, did take a $2.57 billion hit in the two-day meltdown, but he has seen $12.7 billion added to his net wealth so far this year. On Friday, Trump shared a video on his social media site, Truth Social, that erroneously claimed Buffett had praised his recent economic policies. Berkshire Hathaway subsequently issued a statement saying reports on social media attributing comments to Buffett were false. Its stock fell just over 2% in early afternoon trading on Monday.